Good afternoon, all. Steve Parisi here with IBC Global. I hope the day is off to a fantastic start. Today, we got a fun one lined up. We've got our power couple here at the company, the Transues, Scott and Stephanie. How are you guys?
Doing great. Doing great.
Great is great. That's what we like to hear. So today, what I want to talk about is a lot. I definitely want to talk about how you guys work with clients because both of you have been here for several years now. But I also want to talk a little bit about how you work together because you've worked together for several years and that's an accomplishment. Not everybody can do that. So I want to ask some questions about that today. But before we dive into that, let's start from the beginning. So before you worked here, what did you guys do?
Yeah, I'll start first. So before I got into insurance, I was working with a marketing company actually, and then I got into insurance thereafter, and I worked at Bankers Life,
Yeah,
an agency that just focused on traditional products and Medicare supplements.
got it. I know bankers. I started there too. How about you there, Mr. Scott?
Well, mine is a little odd. It's I worked for a company locally here, selling vacuums for 25 years, not 35, 25 years. And and then after that, Steph came to the company. She says, "Why don't you jump in too?" And then that's when I made my move. So I jumped in after that 25 years of working for a vacuum company selling vacuums. Now I'm selling insurance.
Got it. Okay. So I've got some more questions about that. But before we get to that, first question for you, Steph. So I didn't know that you worked for a marketing company beforehand. So I'm going to ask you about that. Like, what was your role at the marketing company? Like, what did you specifically do there?
Yep. So it's a marketing company that we just marketed different products. So it was not anything online. It was actually in person. And we would actually go into stores and we would market AT&T, DirecTV and plans that like that. So we just approach people and try to get their attention, give them the information. So I did that, I would say about 7 to 8 months.
Wow.
So I was always traveling. I mostly worked at Wilkes-Barre and Scranton area.
Yeah. Yeah. So when you say like approach people, like you would cold call on actual companies and stores, or you'd be like in a mall, like when people say, "Hey, come here," like to try the lotion on or something like that, like in a mall, like that kind of stuff.
So yeah, we used to go into either the mall, we used to go into BJ's, go into Walmart, and we just had a station and just approach people. So I will always start off with a smile and just a simple question and just grab the attention and then people will come over and just go over the products that will be selling or presenting that time.
Okay, so that's why you're never nervous making phone calls. Yeah, that's why. Scott, could you do that?
No, it would probably take me some time.
It would take some time. That would take me time too. I didn't know that. That's impressive. So props to you for
Okay.
that. So going from that, what made you decide to get your life insurance license?
I wanted something more concrete. There was a lot of changes that were being made to the marketing agency. A new management was coming in, and I had to look for something else to jump ship before things went south.
Right.
My father-in-law, actually, he's been in the insurance business for 40 years plus. So he talked about it, and I actually looked into insurance about 10 years ago. I had another friend that was encouraging me to get licensed to work for an adjuster. So we needed our insurance license. So I tried doing it and then I just let it fizzle. Then years later, at that point when I was doing the marketing, I was like, you know what, I'm just going to do it. And gave myself some time to study and take the exam, and I was determined, and I'm glad I did.
Wow, check that out. And you mentioned you started at Bankers Life and Casualty. That's the same company I started out at, same office as you two, years beforehand. I failed pretty quick there. That's a different story though. So uh, when you worked here, so this most people don't know at all. Both of you guys came into the office because when I say we, me and my friend John here, somewhat recruited you, Steph. I think it was more John saying, "Hey, I know her. I think she's got an insurance license." I didn't know you guys. I knew who you were from passing. right? Scott was always the guy with the slick back hair that I would see smiling all the time because we live somewhat close, but I didn't like know you guys. My wife knows you, Steph, but that's it. So you came in. I remember that meeting. You met with John, and then nothing happened for like a year. So like, all right, you don't want to work here, which we were completely cool with, like because we were just in the beginning stages of everything. But then about a year later, you did come to work here. So what made you change your mind? I'm curious about that.
Good question. So initially, when we sat down, John brought us over and we talked to you. I was doing insurance already,
Yeah.
just additional products.
Yep.
When we came here and you talked about what you did or what we do now, I just thought it was a scam. I'm just like, I never knew you can do this, about the premiums and such. So I just felt uneasy about it. And and we didn't know you either. I've known
Yeah.
your wife, so I knew you were legit. But it's just, I don't know. It was all new, and it just sounded too good to be true.
Got it. New to everything, not really sold on it, right? Because it can be complex. Scott, what were your thoughts in that meeting? Which I know you talked more to John back then, from what I recall, but like, what were your thoughts?
Yeah, I had a lot of questions. Being my dad being in the business for 40 years, he never talked about anything quite like this.
Yeah.
So I was a little skeptical on what on how he did business. But after a while, we talked about it, and I didn't like the way bankers gave her the business. They were cold calls, basically. They were just calls that you would just call over and over again. She was getting irate clients or customers on the phone. She would have to go to these people's houses, and then some of these houses were far and few between
Yeah.
each residence. So I didn't like the way she had to go by herself sometimes. She did go with an agent sometimes, but still, I didn't like the company that she kept
Yeah.
because of the association there. And then we decided to come back and try it again. And I said, well, and her mom had a lot to do with it too, as far as reasoning and logically reasoning with her. And so she jumped in.
Give it another shot. Well, I'm definitely glad that both of you did. But there's a bit more that I just want to cover on this first. So, Steph, you did come here, and when you eventually started here, like your nickname's number one here at the company for a couple of reasons, right? There's more than one. One is because you were the first full-time agent, right? When we were a baby company before we grew as time passed. And you're still here because we've had a lot of change since you've started. But when you first started, like how confident were you? Did you doubt that it was going to work out, like in the first several months?
Good question, actually.
Yeah.
No. So
Okay.
we worked a lot initially. I didn't know what I was doing. One thing that you talked about was as long as you keep calling, keep reaching out to people, the more you'll learn, and you build up your book of business. So initially, the concept was new to begin with. We were talking to so many different people all over the country, which I thought it was amazing. The leads that were coming in were a big help too, just because you were educating people, you had information out there, people knew what they were looking for or what they were asking. So it helped. But the work environment was a big factor as well. I'm just so glad that um, I held on for those first 2 to 3 months,
Yeah.
because after that we just got into a rhythm, and it's worked well for almost 6 years now.
Yeah, it snowballed quite a bit. The first few months, I remember I was nervous because I get nervous with any new agent when they start to hit the ground running fast. Because back then, like it was commission only, like trying to get things going, that can be scary. So in the beginning, knowing that that's nervous, I also know Scott's big into moral support all the time with everyone. So Scott, how did you help her in the beginning? You're laughing. Yeah.
Yeah. Well, I just saw the financial part of it after she started making her money. Um, and she kept doing it. And as long as you can do it for the first 3 months, that's when my dad came into play, because he said first 3 months are the toughest.
Yeah.
After you get past that hump, and it starts getting better and better and better because you're following up with people. So she was able to continue and get the clientele that she has.
Yep. Just with time, refining that skill set.
Yeah.
Yeah, that's the key. So what made you work here? How many years, Steph, did you work here before Scott said, hey, I want to check this out? Or how did that happen? Was it him saying, I want to do this? Or was it you saying, hey, you should do this? I'm curious, like what went on there?
I think I was working at the company like a year and a half or two, and
Long
we were
time.
just
Yeah.
talking, and we were a little bit more comfortable. So initially, going back to how supportive, Scott's always very positive, and he's a supportive spouse where even the times that I will get frustrated or have doubts, he would just grab my hand. I'm like, babe, it's okay. We got this. Don't worry about the back end of financial things. I got it. Start this off and see how it goes. So the support helped a lot. Once I was stable and knowing my husband, he is really outgoing. He has that very friendly face and he cares about people. And I thought, hey, you could do this. You've been selling vacuums for 25 years. Just come over to the insurance world. You will do great. So we just had that conversation and he said yes.
Look at that. Check that out. So Scott, like, was it that easy? You said, okay, I'm just going to leave my other job and do this. Like, what went through that Scott Transue brain?
Good question. So, I thought about it, and she was doing good with with our company, right? And I'm like, okay, I'm at the end of my career with Silverback. I used to work for Silverback.
Yeah.
I didn't see it going anywhere else. I mean, I got my training, I got all my uh things from them. I'm really grateful for what they did for me. But then I decided, well, I think it is time for me to jump ship and do something else, change my career. Sort of. I still in the sales department, but I'm selling something different. And then at that point, Steph was able to provide for us at that point because she was making her money, and I was able to stop all that, have no income coming in for myself anymore, and just focus on the life insurance tests,
Yeah.
getting my license. And she only gave me 3 weeks to do that. She told me to take the test, study for 2 weeks, and then schedule your test, and then take it. And
Wow.
then, fortunately, I passed it the first time.
Yeah.
So and I'm happy about that. And then from then on, of course, it takes some time to build up your clientele.
Yeah.
But in that 3 month period, I was able to do that, and then eventually go on for another. It's all about follow up and being friendly on the phone, and I already had that
Yeah.
from back days, and so that wasn't too bad. Sometimes talking on the phone and bringing them life insurance. But the thing is, with this company, they're coming to us. We're
Right.
not really after them. They're coming to us. They already know what they want sometimes, and it's easy to talk to people on the phone.
Yeah, that helps a lot. I mean, that's the goal with our company, to educate first, and if people are interested, we'll show them what to do. But with phone calls, I mean, that's one thing you in particular here, you just mow through them every day. Like I see that everybody sees it with your statistics too. So I mean, that's a strong skill set of yours. I want to hit on something that I think people will really appreciate about you too. So you mentioned when you decided, okay, I'm going to stop with this company I've worked for 25 years. It's a long time, and do something else. You're at a point where you mentioned income wise, like I can do that. I can stop what I'm doing and focus on this and kind of reset, which is nice. Before that, though, like to go back to the beginning, it's kind of, let me know if it was the opposite, where you were saying to Steph, hey, give it a shot because we're okay, because you had the stable income there from your other job. So, hey, guys, work together to say, okay, I've got it, while you learn this and see if it works, and then flipped afterwards. I mean, that's not easy to do. Like when you're trying to balance finances and such, like that's really, really cool that you guys did that. Nice
Yeah,
work. Yeah.
but that you know during that time, we also had a cleaning business. We worked together.
Yeah.
So we already worked together as a couple,
Yeah.
um, before we work here together.
Yeah.
Um, that helped us with the income as well, plus my regular salary from Silverback. And then I was able to support her while she did her thing with the insurance business and get her clientele up so she can then give me the opportunity to do that. And I mean, I never thought in my wildest dreams I would be an insurance agent because my dad was an insurance agent. He still is for 40 years.
Yeah.
So, but it's
We,
it's it's it was a nice transition from that someone back someone vacuums over to this.
yeah. I would call you a financial services professional, not an insurance agent, but that's okay. You're calling it as it is, which is all good. Cool. Thanks for going into that, guys. Let's transition into how you work with your clients. So I'll let you guys tag team these questions. And this is going to speak to how you actually conduct yourselves professionally. So when you speak with someone who comes to you, they come to our company, they're interested in putting their money into a life insurance policy, the cash value is what they're interested in. Like, where do you start? How do you actually help them? Because people come at different areas of research. They're ready to go, they're brand new. Like, where do you typically start someone?
I'll begin. I'll initially ask them, how much research have you been doing? Have you been watching mostly videos? Have you been doing some reading as well? Any books? So depending on what kind of research you're doing, I'll jump into the main points. Our main focus is the facts or the benefits of life insurance. The
Yeah.
reason why we're using life insurance product, the benefits of minimizing the insurance expense, the tax benefits and such, and then ask them, what are your goals?
Mhm.
Do you have any businesses? How much money do you save typically a year? Like, what is the purpose to looking into the whole products? So
Mhm.
depending on how they're answering, then I'll focus on a different direction according to what they're looking for. So I think a big part of our business is listening, making sure that we're fully listening to what the client wants. In the past, I have found talking to different sales companies or people, they typically just have a product in mind and they're trying to sell that product without asking, what do you want? What is your main purpose? So I think just focusing on what the purpose of the client is looking for helps a big part to really helping them out.
Yeah, I agree. Listening is the number one thing. Go ahead, Scott.
And I agree with that. My usually when I talk to people, I ask them, how they looked up or how they got into this high cash value of whole life policies and where they're coming from and what do you know about it and what you read about it, and I kind of go from there, and then I ask them about their goals. I mean, some people are uncertain on what they want to do with their money, and so I ask them what kind of goals do you have in mind for this kind of product. And then it snowballs from there, and they tell us, and we get into a nice conversation with that, and the goal is to listen because many agents or people out there don't listen, and they just sell a product. We have numerous products that we can sell them.
Yeah.
You have to kind of listen to the client to see what works best for them.
Yeah.
You can't just put a product into their hands and say this is the best without listening to them.
Yeah, definitely. So that leads right into my next question. How are you going to help someone determine the best company, best product, or best solution for their particular situation? I know the answer is it depends, but what are some questions you could ask there? Pretend I'm a client and you can ask me questions right now if you want. Potential client.
Yeah, sure. Well, we'll start off if we're looking for, or we're talking to an investor as an example, where they're looking into like, this is the amount of money that I'm bringing in with the business. I would
Yeah.
like to use it for my business itself or buy more properties and such. I will ask them like, what is the amount that you typically save? Like that you feel comfortably where you say, hey, this is the amount of money that I bring in past all the expenses that I have personally. They may have a certain number in mind. They may say, this is so new to me. I want to start a little bit small. Just want to deep my feet into it. And then I'll go into the information and give them the pros and cons. What I mean by that is that one thing that I have found with our clients is that a regret that they have is, I wish I would have started bigger initially.
Mhm.
So when clients do say, I have a smaller number in mind because I'm scared, I'll go over the benefits of starting maybe just a tad bigger, just saying, hey, based on your age and based on your goals right now, this is the amount of money that you're bringing in. If you're able to put it into a policy and yet commit to the minimum premium and have the flexibility to pay money as you go or throughout the years, this would be a good product. A lot of our clients, initially it is a
Yeah.
life product. So there are insurance expenses. Although we're pushing the premium lowest as we can, with mortality tables, they can be a little bit more expensive internally. So of course, the younger that you are, it could be a little bit better. But if you're able to start a policy while you're healthy and a year younger, it can help your cash value performance throughout the year. So I'll hit that. Like, think about it, take advantage that you're at this age, take advantage that you have the money now. If you're able to push it into a policy throughout the years, it could benefit you. Of course, I won't push it, but I'll give them the examples.
Yeah.
Looking into the options can help a long way. And we're big on that education, right? We educate, we provide the options, we provide the information the client needs in order to fully understand and see the benefits of getting a product that works best, especially when they can.
Yeah, that's a thorough explanation. Thanks for going into that. I mean, a good example, because that happens quite a bit. Someone that perhaps does very well financially, say it's a real estate investor, their positive cash flow, 50 to 100 grand per year, that just goes into the bank. And they look for additional real estate deals, but they can heavily fund a policy. And it's
Mhm.
common, yeah, to see someone say, okay, let me go aggressive with this policy because I've got this excess cash. However, uncertainty can definitely slow us down if we're still trying to understand the product. So if I said, I only want to start with 10K, get my feet wet and such, a line that you mentioned that I like a lot is, we can definitely do that. Here's the 10K per year option. But can I share what a lot of people have buyer's remorse about? Yeah, sure. A lot of times when someone is looking at a large policy or can really fund one, they say, I wish I would have started larger. So here's a 10K, then here's a bigger policy, 25, and then here's 50, so they can see it and then get comfortable with it.
Mhm.
Scott, how do you typically approach that?
I generally, I get what Steph did.
Yeah.
Look at their goals and what they have in mind. If they want to start low, I always recommend. I can show you some more numbers. You can overreach it a little bit. Don't go too much, because if you go too much and you never hit that, it's not going to optimize your policy as well. So I show them different samples. I show them what the original example of 10K, say for instance it is, and then I might shoot it a little bit to 15 or 20, just to show them different numbers so they have an idea on what they can be able to put in. And like Steph said, the flexibility of one of the companies, you can just commit to the minimum and then add anything later on down the road. And anything that you miss prior years will always roll over. So you have the opportunity to still catch that up. If you had a bad year, some people have good years and they can put more money in. Some people have bad years and they can't put as much in, but they can just commit to the minimums. And it just depends on what they want to do with their product. There's different companies that have different features. Some are flexible, some are better when it comes to loan options. Some of them you can put it in at one time and it can adjust it accordingly, one time per year. But then there's other companies you can put in for just the minimums and then add what you want up to your limit at leisure. So it just depends on their goals, and I try to figure that out, listen to them, and see what they want to do, whether it be they want to borrow from it and repay it, or they want to keep it in there for
Yeah.
uh, rainy days if they need it later on down the road.
Yeah. Is the topic of flexibility still somewhat foreign to a lot of people you talk to? Because I hit on it nonstop just in our messaging for the company, but it's difficult because when you think of insurance, like just insurance, regardless if it's life insurance, car insurance, whatever, is it something that you think is flexible and fun, or boring, like, it's an insurance product. Like, I don't want anything to do with that. So flexibility, like give me an example of that. Because if I'm talking to you on the phone, I say, okay, I'm interested in 10K per year. You showed me the 20K per year option, Scott, but that kind of makes me nervous, right? To commit to 20K per year. You said I can commit to the minimum, but what does that actually mean?
Right. So you go through an illustration. I usually go through a video. I make up a personalized recording for
Yeah.
them, and just go through what your obligation is, what you have to pay as far as base premium, 1 year term cost, some PUA dollars in mixed in there with the commitment. That is your commitment. Anything else that you put in is what you have the ability to put in.
Okay.
Uh, not necessarily you have to hit that amount every single year. It's advantageous to do so to optimize your policy. But a lot of times, when I talk to somebody that has quotes from other agencies or insurance companies, they don't understand the flexibility piece at all.
Right.
They get a bill in the mail, they pay their premium, and they don't know if they can put more in or not because they're just been paying for the premium. Um, Sometimes I ask them, "Well, can you put more money in the account than the actual premium?" And a lot of times they don't know.
Yeah, which is common. So with that 20K per year example, if I'm contemplating 20K per year, what would my minimum be? Average.
Around 2,200 to 2,500 a year.
Yeah, you got it, right? So the minimum bare bones is 2,000, but when you add your bells and whistles, 2,500 bucks. So what that means is literally I can commit to 2,500 and add up to 20 at discretion.
Right.
That's where it gets fun, right? So I mean, you can tell I'm an insurance nerd, but that is pretty cool when you can really juice the cash value and commit to a small bill. How about this? What happens when you get someone on the opposite side? I come to you and I say, I love this concept, man. I love all the things about cash value life insurance. I want to put away 100 grand per year. I make $100,000 per year. That's my total income. I'm talking to you, super excited on the phone. How do you kind of bring me back to reality without spilling cold water on me? Because you have to do that right. Otherwise, people just think you're a jerk and then they never want to talk to you again.
That's right. So going back to their income, ask them, okay, this is the income that you're bringing in, 100,000. What are your expenses?
Yeah.
Just when you talk about expenses, that creates reality because once you're looking, okay, this is the money that I bring in. How much am I getting after tax? How much is my mortgage? How much is my business or anything that they're putting money away? And then when we look at the cash flow number, I'm like, okay, let's focus on the cash flow because we want to make sure that you're not going too big and then regretting it. And going back to the example, so the numbers, again, going back to the numbers, it helps. I will show them best case scenario. Okay, what if you do get this policy of 100,000, you consistently hit it? Let's look at the same example where you're able to do 100,000, but realistically, with your cash flow at this time, let's say that is 70,000. I want to show you the examples of what that looks like. And then worst case scenario, what if you only do the minimum premiums only and never hit that maximum? Looking at the numbers comparisons, they're able to see, okay, this is what would happen. Worst case, if I never hit the number, it will work sort of like a traditional policy where I'm just paying a premium, very little cash value, and it just deters the whole, or it defeats the whole purpose of like saving the money, creating that cash value up front, earlier break-even point. So seeing the numbers helps them to see without me saying, this is not for you, or this is not going to work as
Yeah.
what you think. But the numbers do help a lot, in my case at least.
Provide a visual so people can actually see it and understand it.
Mhm.
Scott, how do you let people down easy?
That's the hard part because
It
some
is.
people have unrealistic views of insurance and they don't realize that there are limitations, especially for the insured, because companies are not going to overinsure you.
Right.
And so they have a set death benefit based on what you make, but then the insurance companies will limit you because they know you have bills. Right?
Yeah.
Most people have bills, and they usually do 10 to 12%. I see it as high as 25% of what you make that you can put into a policy.
Yep.
So I do show them the numbers just like Steph does. Show them the numbers. This is what it would look like if you max it out for $100,000. Um, and but realistically, can you do that 100,000 every single year? Because if you don't, it's not gonna optimize your policy like the way you want it to be optimized.
Yeah.
Yeah, they appreciate the looking at the numbers so they can actually visualize it. They say, yeah, you're right, how am I gonna put 100,000 in there if I'm gonna make 100,000? So, and they have other bills. So it's kind of hard to do that to some because they have these grandiose ideas, but you kind of have to bring them back to reality.
Yeah, and it's good. I mean, they're ambitious. They want to like grow their net worth and such. So you don't want to poo-poo that in any way, but at the same time, you still want to educate properly and give advice that you would want if you were them just using the knowledge that you have. What if I said to you this? I said, okay, I make $100,000 per year. I want to flow all of my income through a policy, 100 grand, and then I want to take loans out to cover my expenses. And I heard that I could do that with a flexible insurance company where I can commit just to 10 and add more PUAs at my discretion to get around the income guideline. So let's pretend they can do it because you can do that with some insurance companies. And I'm adamant, like, this is what I want to do. Would you recommend that for me? And then why or why not?
Good question. Going back to the flexibility, yes, companies are flexible, but one thing that I will keep in mind is that when it comes to the loans, a lot of the insurance companies do have limitations. They're typically quick. We have 10 business days, for example, that you're able to take a loan out. So then I will talk to a client and say, okay, if you're flowing your whole income into it and you're not letting it sit for a year or two and you just want to take money right away, each time, keep in mind that realistically, we have the 10 business waiting time before you're able to take a loan. Would that put you behind or set you behind your bills? We want to make sure that we are not running into any problems for the client. Aside from policy design, we want to make sure that we're consistently working with service too, and also realistically, I'm like, okay, we don't want you to be falling behind where I'm like, oh, I got an overdraft or, so many different possibilities. So realistically, I'll go over the limitations that we have with, it is at the end of the day, it is flexible, but it's still a life insurance company.
Mhm.
So they may set some limits and you may not get your money right away as you would like to be able to take that monthly income or monthly money, if that
Yeah,
makes sense.
it does. So you're hitting on the convenience piece. If I flow all my income through it, I might not be able to put it in to a life insurance policy and then pull it out the next day like I could with a checking account, for example. So from a convenience standpoint, you're 100% correct. What about the actual numbers? So just knowing what you know, like if I fund a policy with 100 grand per year and I want to live on that every year, so I'm going to put 100 in and pull 100 out or as much as I can, like, is that something you would do personally with your own policy? Would you flow all of the income through it, purely focused on the numbers, and then why or why not?
Well, I know that the companies have limitations, and if you
Yeah,
do that, of course, in the first couple of years, the companies will overcharge for their expenses. So you're not going to have exactly 100,000 in your account anyway.
of
You
less, right?
Yeah, you're going to have like say 83%.
So
So
that
out of,
answers the question. Yeah, yeah,
yeah, so out of 83%, you only can borrow 95 of it
yep.
percent.
Mhm.
So you got your limitations there, especially the first couple of years, and then you have to try and make that up from year three all the way to five when you start breaking even. You can do more of that, but you're still limited because of what Steph said of convenience. I always try to show them about the time restraints and how harder it is for us to get your money out of the policy than if you have a checking account, having it directly go into the whatever amount you want to take out for that specific check bill. And sometimes it's not as convenient as that because
Yeah,
it's something that they have to think about. So it's advantageous to do so. So sometimes you want to leave a sum of money in a checking account just for that, and then the rest you can just put into your account for the policy.
yeah,
And to your question, Steve, where you mentioned, would you do that? I would tell me personally, if I had an emergency, I would like to be able to take my money ASAP. So having some safety net, here's a little bit of cash value or cash in your bank account where you're able to take money in case of an emergency, or looking at, keep in mind, although we're structuring the policy for maximum cash value, you are negative within the first 2 to 3 years, and then you're breaking even in the best case scenario, year 4. Would you want to start taking money when you're past all the expenses and you're positive, opposed to drawing money constantly when you're negative initially? So I would just look at pros and cons, and just go over that. And again, we want to make sure that we're realistic with the client.
Yeah, no, that's good. I mean, it's important because in the early years, if you're going to take loans, you've got a negative return on your cash value without any loans. So you're going to pay loan interest as well. So you're shooting yourself in the foot in some ways. And yes, you might make it up long term. Why people are attracted to that concept is because once I pump money into the policy, it's compounding for me forever. When I borrow it, I'm still earning interest on it. That's the attraction. I get all of my income to compound for me forever. Yes, that's great. But at the same time, we do have that cost to borrow. That's money that goes to the insurance company. A lot of times, if you see, okay, I'm going to take maximum loans out, if I don't pay the loan interest, it can take 10, even 20 plus years just to see an actual positive return. That's if I keep pumping money in. So if someone asks me that question, I do like to show the options, especially if someone wants to see them. But my answer, the way that I answer that question has changed from years ago, where I let them know, I would not do that by any means, because I'd be shooting myself in the foot in the early years. I want to make sure I have a positive cash value before I start taking heavy loans or even think about putting a large percentage of my income in there. But when I look at the numbers, it never makes sense to do that right out of the gates. I've got to have a heavy savings rate, meaning when I take income from that policy, I'm putting a lot more in it than what I'm borrowing. That makes sense?
It does.
Fun stuff with life insurance, right?
Yeah. And that's what we do, though. When we look at the illustrations, we'll show the loan examples. What if you're taking this loan out every year and never paid it back? What if you're only paying the interest, and what it looks like when you're paying back in full? And again, seeing the visuals too helps to, make the numbers work properly, and then see, okay, I'm too negative. Or if you never pay that loan and just paying the loan interest, it doesn't make sense. So looking at the numbers, looking at the comparisons, it helps.
That's the key. Yeah, the concept, right, can really excite people, but when you see it, now you know what it's going to look like in reality. And we believe what we see, not just what we hear. So who do you typically see succeed with whole life insurance? And what I mean when I say that isn't necessarily just someone that puts a lot of money in, but what's the type of individual, whether it's someone that runs a business, maybe they're at a certain income level, you see a personality trait or a trait that they invest in real estate a lot. Like, what do you typically see?
I think are people who are well educated in how to properly use it. We have different wave of clients. We'll have clients where they're either paying in $20,000 a year or less, or over that amount. I think as the client fully understands the product and are fully maximizing the policy year over year, that's where they're getting what was initially shown.
Yeah.
We're always talking about design actual performance as well. When the client is fully consistently adding the same amount of money every year, that's when they're always happy and they're like, okay, this is exactly why I got this policy. It's performing the way that it should. So that's what I've seen. The client that's fully educated, that it fully understands how to make it work and fully adding the money every year. Those are the clients that I feel that they're pretty content.
Yeah, they know what they're getting. Yeah,
Mm-hmm.
they know what they're getting into. Scott, like, if you want to hit on that too, I'll ask you a similar follow-up question. Like, where do you see people have buyer's remorse, or when they express something to you, or they thought it was something other than what it actually was? Have you ever had a situation like that?
Yeah, I have. It's because they have, when they talk to me in the beginning, they have these hopes and aspirations to fund it the way it's shown.
Yeah.
But yet, then when reality hits, they only can do minimums
Okay.
or a little bit above that. So that's when I see people are remorseful because they shoot off a little bit more than they can handle, and they are not able to fund it like they wanted to. Now, life happens, things get in the way, but I see that more and more is that if a person doesn't fund it the way they want to fund it, it's not really going to work for them. And that also means when they borrow, they pay it back prompt, promptly, prompt enough time to do that, so they don't have to keep paying that interest over year after year because there's principal still out. So it really defeats the purpose of borrowing money if you're not going to pay it back. And I hear a lot that well, you don't have to pay that principal back. Yes, but it's advantageous to do so at the end. So I see a lot of ones just pay minimums. I see it more successful when you're disciplined enough to put the whole lump sum in, and then wait until the next year and put it in again. So those kind of policies are more successful than the ones that maybe just, well, I just want to commit to my minimum and then put in what I can through the course of the year.
Right. If I'm a potential client and I want to put in 100 grand per year, you look at my income, if it's 110,000 per year, you think it's going to be a stretch. The most I've ever had in my checking account has been, 5 or 10 grand. Like I do live close to paycheck. Maybe I can do the 100 per year, but I'm going to stretch to do that. I'm going to have to borrow heavily.
Right.
Would it, yeah. Would you
Yeah.
recommend? Go ahead. Yeah.
I wouldn't recommend that because something like that is never going to work for
Where
the
would I
client.
start? Like, what would you recommend I start?
Well, if he's having trouble starting saving 10%, $10,000, I mean
Yeah.
that's probably where I would start.
Yeah.
Because I don't want to deflate his balloon, but the company. If you look at a company and they say we only adjust the contribution one time per year, and you're starting out 100,000, and but you only make 110,
Yeah.
the company's going to push back on that and say how they're going to afford putting 100,000 in it when they only make 110.
Correct. Yeah. The insurance company will want to make sure of that. Yeah.
Right.
And also too, just from like a stress standpoint, like a big thing is like numbers aside, like what I like to tell people is if you feel you're going to be stressed out with this minimum amount, I'd make it lower.
Yeah.
Like the nice part about flexibility is to set the minimum at an amount that you feel like I could do this in my sleep and I'm not even gonna notice it. So if the
Right.
minimum per year is 5 grand, I'm like, all right, yeah, I could do that pretty easily, like 5 grand per year, you're telling me? Yes. That means I can add up to 50x that or 50,000 per year, 10x 5,000, 50
Right.
grand per year. So commit to an amount that's very, very easy, doesn't stress me out, and I can still plow a lot in. And then if I find myself redlining it, hitting 50K every year, then that's a good time to maybe look at a new policy.
Right.
Yeah. All right. So here's a question. You both work with a lot of people. You also work with people that put a lot of money into life insurance policies. How do you make sure that that person wants to work with you? Like this is a personal question because when you start to work with business owners or people at a higher level, like you do have to give them confidence in them that you're going to get the job done. So like, what do you do? I know stick to the process, showing the numbers and such, but what are some like just internal principles you guys have when you work with large prospects or large clients?
Yep, speed. We want to
Yeah.
make sure when we're looking at bigger clients, they know what they're doing. They have a business model and they're really successful at it. So what they want is a product or an agent that is quick. This is the information we connect. This is what I'm looking for. And if we're able to get that information to them that same day, or, the quicker it is, they're like, hey, I'm confident that this agent or this company can handle what I'm looking for. So getting the information to them as soon as we can, I think that's pretty number one. And knowing what we're doing as well. So going back to a point that Scott made before where we do personalized recordings. we send a lot of information. It could be very detailed. By actually breaking down the information in the video, it can be quite helpful for the client too. We're like, okay, they know what they're talking about. They know what I was looking for, and they're explaining it to me just to make the life easier. So I think that's very, very important to what we do as a business.
Yeah, fully agree. Speed is number one. My OCD kicks in with the same thing in mind all the time. How about you, Scott?
I think speed is good too.
Speed?
Being attentive,
Yep.
making sure when they email you, make sure that you're prompt with answering their emails or calls or when they call you. But not only when before they get the policy, after as well.
Yeah.
Because after, if you just drop them after you get a policy, that's not good either. So they want attentive all through the policy as long as they have it. So being attentive, customer service is key. That they know that this is a company they can rely on and get information from without any problems.
Yeah. What about, I want to talk about communication a little bit and clarity of it. What if they're confused with a certain aspect of the policy? Maybe it's a rider, maybe they thought the loan interest worked a little bit differently than what they were told or they read, whatever it might be. They send you an email and you can tell it's a little tense, right? We've all had those situations. What would you do and what would you not do in that situation?
Fire back
So
at
Yeah, you would. Agreed. Go ahead.
yeah, giving them a call, if
Nice.
it's something that they're worried about, which I understand, especially when you're looking at a product, we're working with money. And if it's a concern, we want to make sure that we're talking to them on the phone.
Yeah.
I think many times we're able to hit the main points quicker, opposed to going to an email, and then there might be some leftover questions. So by calling them as soon as we can, it can go a long way.
Yeah, that's important. Getting on the phone. If we can't get them on the phone, what I'll try and do is respond via email, text, and maybe a video message as well, mainly because I want to convey the tone of the message as well. That's really important. If you're ever in a bad mood and someone sends you an email or text, what I typically do is think that they're being negative, even when they're not. Like we do that, right? But my point is, if you do that in business, that's what can just end a relationship, and it's over something silly, and that's what we want to make sure we don't ever do. Scott, anything you want to add there?
Yeah, it's key. I mean, you can tell when the client is upset.
Yeah,
So even from an email. So a lot of times it's not easy to do to work out a problem over the phone. Sometimes people prefer just email or text because then you don't have to talk to them.
right.
But by working it over the phone, it could be something simple, like I said, and then you can dissolve it right then and there, or take care of the issue wherever they have. Um, person to person,
Yeah,
by phone call. So, and you can uh, feel them out and on the phone call with emails and texts you get. You don't really have you don't really see their personality, their body language, of course. That can be lost in translation. So it's always best to call just to get it done. That's what happened to me the other day. She had a question on something, and I just called her up and fixed it
nice.
right there.
Yeah. Yeah, when you can call, that's definitely the easiest. And I know I appreciate it when someone calls me to talk through a situation and listen. Like that's really, really important. And to your point, like if they don't want a phone call, because sometimes people are annoyed and they want things in writing for a particular reason. Like my thing is make sure we still communicate in the manner that they want. We could offer a phone call, but if they want to communicate via email, communicate via email. And then to to get that phone quality in there, that's where you can put a recording in there or something like that to convey that tone. Takes more work and time, right? Because now you're putting yourself on video, right? Or maybe even if it's a Loom video or something like that, that's not always easy to do, but it's important and it really shows the client that you care. Like that's the big thing.
Right.
Cool. Couple final questions here as we get to the end. What is the hardest thing about working together as a couple?
I think initially it was harder because we were, Scott was new, we were training. As the years went by, we got into a flow where things were easier. Nowadays, what I would say is it's hard to, we work together, we live together, so it's hard to disconnect family
Yeah.
life and work life. So there's certain times where, if it's the weekend or a night, I'm okay. It's our personal time. Let's leave work or any problems that we have off for now. So I think turning off work at home is it's a hard for us, for
I
me at
get
least.
that. Yeah. Fire away, Scooter.
So, since we worked together with the clean business, it was kind of easier for me. However, I came over to the IBC, I could tell you one story that quickly here. Is she, when I came in, of course, she's the senior agent. She helps me with things, and I sometimes, other agents at work here, and when we used to all be at the office down here, I would ask her a question, and she wouldn't have time for me. So when another agent asked her a question, oh, she was all ready to help him out. And he said, "Wait a minute, hold on. Why did you help me? But you helped him." But over the time, we got better, and it's. I think it's easy. I mean, yes, she's right. Sometimes I talk about it's all me too. I talk about business after hours kind of thing, and we want to sit down and relax, and we don't want to talk about business. We want to talk about other things.
Yeah. I know what you
Yes,
mean.
that's ours.
Yeah. I do that with Tara. I mean, I talk about business a lot because yeah. Anyway, thanks for sharing that. I do appreciate it. It's not easy for a lot of people to do that. One of my good friends, he used to work here. He worked here a little bit when Steph started, but then he left. He outright said, I don't want to work with my wife. And he's been married to her for like 40 years. Like they love each other. Like there's no problems there at all. It's like, no, we get tired of each other. Like, I don't want to do it. He'll just speak frankly and she'll like laugh and like just say, knock it off, buddy. But they've got a good relationship. My point is like not everybody can do that, but it's good that you guys do it in a very nice way, which leads me to my last question. What's your favorite thing about working together?
One of the things that I like is having someone who understands, what we do for work. If there is a problem, we're able to talk to each other about the problem. We'll brainstorm together and we understand what we're saying. So I think that's a big benefit where you have someone that knows exactly what you do or what you go through during the day. Where, if I have a case or Scott has a case, like, hey, what would you do or what have you done in the past? Then we're able to help each other solve that problem without being overly stressed. So I think that's an added benefit of working together.
Yeah, that's a big one. Thanks for sharing that. Fire
Yeah,
away, Scott.
that's something I didn't even think about. Usually if somebody works on another field and we work in this field, come home and say, well, "This is what happened," and we don't have any
No.
clue
Yeah.
what happened. So that's a good way, a good working relationship we have. Also, it helps our communication as far as a married couple. So
Yeah.
that's something that we can that's a favorite thing of mine that we work on together.
Yeah. Cool. Well, thank you guys very much for sharing that and for your time today. I know we've always
Thank
got a
you.
lot going on. Yeah, definitely. This is always fun.
Yeah, we always like talking to you.
Yeah, the feeling's mutual. We can always
Well,
walk down the street too. We don't live too far from each other.
no.
Well, thank you both very much for your time. I do really, really appreciate it. If anyone watching would like to get in touch with Scott or Steph, we've got both of their contact info below. Feel free to ask any questions, all things finance. And thank you guys again. Until next time, we'll see you soon.